Hey fam, my name's Taylor Jorgensen. I'm a 12-year IT professional, investor, and trader. I share my portfolio transparently, navigating the psychology and the philosophy that ties it all together. Today I'm going to update my outlook on the markets, where my head's at, position changes, and share a new investment I'm planning, which is buying a small business. But I'll talk more about that later. Looking at the markets, equity markets continue to pump higher on the back of the AI boom and technology, and it's kind of just a scenario of valuations are stretched. Who knows when it's going to top? I'm not trying to predict that. I'm just trying to focus my portfolio on the areas that I have the most conviction in. So I haven't made a lot of position changes lately. So my outlook continues to be focusing on the precious metals and commodities markets. I'm open to particular investments in other areas. It just would need to be the right timing and the right conditions. And I'll talk a little bit more about a few things on my watch list later. So looking at the gold market, in prior months, I had talked a lot about this April timeframe for a major turning point, and it's looking like the price low came right before April and late March. So right now, my expectation is that we are going to stay above that price low. We don't have to, but that's the base case. And I still have very strong conviction that this is a intermediate term correction in a longer term bullish cycle. And there's a number of reasons that I think that. So to talk about a few of those reasons, again, on my channel, I don't reinvent the wheel. I have some of my own research, but I also outsource a lot because there's people that do this for their life's work, and these are great people. So this is Jordan Royburn of the Daily Gold, and his latest video, he shows a few charts that I just want to go through. So this first one is just looking at the cycles. And what he talks about is that there's intermediate term corrections, and there's cyclical corrections, and there's secular corrections. And so he's pointing out the I's here are intermediate and the C is cyclical. And so if we look at the current leg that we're in, what he's trying to point out here is that at best we're in an intermediate correction right now. And he also has these gold analog charts, which is looking at prior percentage moves in gold at the intermediate correction stages so that he can try and see what's the rough pathway that these corrections can take. So right now, based on those prior moves, the max downside would be this blue line, which is around 3,900. Again, these are just prior cycles, so you never know what's going to happen, but this is just the potential of what could happen. Another important consideration is the implied allocation to gold. So this is how people are positioned in precious metals or gold specifically as a percentage of their portfolio. But this chart looks the same or very similar for silver and mining stocks and things like that. The percentage allocation is very low compared to the latest cycle from 2000 to 2011. And then this bottom chart here is gold ETF holdings by region. And the important thing that this chart is showing is that even today, so this dark blue is North America. Even today, we're barely above the highs of 2021 and 2011. And so the allocation is very small compared to total assets. And this last chart from him I want to show is showing the GDXJ, which is the junior miners. And it's these bottom line charts are showing the percent of stocks that are above the 20-day moving average, the 50-day moving average, and the 200-day moving average. And based on his work, what he discovered is that when you're in an intermediate term correction, I think he said he looked back to 30 years of data. Typically at those intermediate lows, you see a percentage above the 200-day moving average around 10 to 15%. So this still has some room to drop into these support levels, and perhaps around then it would reach more of that 10 to 15% or even up to 40% if it's a mild intermediate term low. And then I also wanted to look at the COT report. The COT report is very interesting. This is a 3-year view, and I just want to point out a few things. Look how low the open interest is in gold. We're at all-time highs, and yet open interest is at or still near a 3-year low. And then if we look at the commercials and the large speculators, the commercials who are typically correct in their positioning are very bullish right now. They're still postured near these highs from April of last year to today. And similarly, the large specs that are usually wrong are positioned the most bearish that they've been in that same time period. So these are just more data points pointing to that there's a lack of interest, and the positioning by these entities indicates bullishness. And then I've talked about this in a few other videos, but it's also important to look at gold and silver against the equity markets. So if we look at a long-term chart of this, in those cyclical periods, you always have outperformance of precious metals against the equity markets, and it's been basing for the last 10 years, and it's still churning around. We did have this breakout earlier this year, but it is falling back into that range right now. And, it's variable where you could put this line, but in any case, I think eventually we're going to see this continue chopping around, and eventually it's going to work its way higher. And that outperformance against the equity markets is another indicator of the market maturing. And if we look at the NASDAQ, it's the same picture. The precious metals have underperformed more against the NASDAQ. And it makes sense right now because we do have that AI boom going on, and those valuations are stretched and frothy. And so, again, these things can take a really long time to play out, but eventually it is going to finish basing and start moving higher, and we're going to have that upswing. If I zoom out a little bit more, it seems very unrealistic that all we're going to have is this little move right here, and then this is going to be the top in gold, and it's going to grind its way down. Based off macro factors, it just doesn't make a lot of sense. We continue to have geopolitical tensions. There continues to be massive deficits with the government. I saw a chart from Tavi Costa that talked about how, as a percentage of GDP, our interest rate payments have never been higher, or they're close to the all-time highs. And that matters because, and also rates are elevated, and that matters because we have to service that debt, and every few years or whenever the treasuries that are purchased have to be rolled over, they're rolled over at those new rates. And so our interest rate payments are going to continue to move higher if rates move higher. And so eventually we're not going to be able to service that debt. Either the dollar is going to have to be significantly weakened, or we need to grow out of that. It seems a lot more likely that the dollar is going to weaken, or they're going to cut rates, or both things are going to happen. And we know that inflation continues to be running high, and it's probably going to get higher. We're going to continue into probably a deeper period of negative real rates, which means the inflation rate is higher than treasury rates. And we're going to continue to have outperformance in the precious metals sector. That's very good for precious metals and other hard assets. So I have made a couple portfolio changes recently that I'll just go through. I added a call on AEM, Agnico Eagle. This is arguably one of the best run gold miners in the world, and they're just printing cash at these levels. A lot of miners are very profitable, but I really like the idea of picking up a call on them in this intermediate term correction that we're in. And it's as simple as that. And then I also picked up a call on natural gas futures. And the play on natural gas is really just that it's significantly underperformed against oil. And just like most commodities, I think it's really going to benefit from the commodities, super cycle or larger commodities bull market that we're in. And so I'm looking at this as a trade of mostly mean reversion against oil and mean reversion to a more fairly priced level. And here's that view of natural gas against oil. So you can see that it's at these lows here, and it's just starting to break higher. Otherwise, I haven't made as many changes lately. It's slowed down a lot. And the reason for that is because we're just intermediate term correction right now, and I don't see any opportunities to deploy more capital. If this correction deepened farther, then I'd probably start picking up some stocks. I would love to pick up more Unico silver. I bought a little bit around 58 cents back in March sometime. And then when it was breaking higher here, I bought more at 71 cents. So if it breaks these lows here or just comes down to this lower level again, I'll probably pick up some more. Again, this company, and this phrase was coined from Jordan Royburn at the Daily Gold. All the credit to him. He thinks that this could be the next Abra Silver, and we've seen Abra Silver has performed very well over the last few years because of the size of their deposit, and it's a great takeover target. Other than that, I'm not sure what else I would pick up in the precious metal space. Honestly, I would probably, if anything, just buy more calls on AEM. As far as other stocks that I'm watching right now, I do still want to pick up Waste Management at some point. This is something I just want to hold for my lifetime. I've been trying to figure out a good spot to enter an initial position. I'm just being very patient with it, but this is a great recession resistant, slow growth, but consistent growth stock. And a lot of big names have a chunk of this because it is a great company. I also would love to pick up the Bridgewater All Weather ETF at some point. So the all weather term was coined by Ray Dalio, and it just relates to a portfolio that's diversified to handle any economic conditions. And so State Street, which is a different company, made an ETF that models that philosophy. And so I would love to pick this up at some point. I just, again, being very patient with it. BHP, I've talked about BHP before. I made a video on it. I would love to get a lot more BHP. I would love to get this up to like a 30K position, which would be like a 5% position in my portfolio. They're the world's largest copper miner. They're just a great company that I think is going to perform very well over the long term. I'm still watching oil and gas stocks. If we saw a deeper correction, I'd probably pick up a little bit more. But overall, just holding on the ones I have. Main Street Capital, this is a BDC company, business development. So they basically do private lending for small and medium-sized businesses. I think eventually we are going to have a recession, and so I don't want to pull the trigger on this just yet, but I do want to eventually pick up this stock too. It's just another stable dividend growth stock, and I want to keep building that part of my portfolio. I'd love to get more SCHD. This thing's been kind of pumping just like the market has, so who knows when I'll be able to pick up more of this, but yeah, I would love to get some more SCHD when I can. And then Berkshire Hathaway. This is something I'm just going to pick up if we have big pullbacks. You know, this is Warren Buffett's company. Warren retired and the new CEO, Greg Abel, took over. But this stock is pretty much a bet that you think Greg is going to be able to outperform the market. I do want to point out, though, for this stock, I've looked over time at the performance against the S&P 500. This stock has not outperformed the S&P 500. If you cherry pick the particular spot in 2000 or whenever it was, yes, it did outperform. But at any other time, the S&P 500 has actually outperformed. So even though it's only one data point, I think it makes a lot of sense to pick this up in a really deep, pick up more of this in a really deep correction, expecting that at those low valuations, Greg Abel, this new CEO, would pick up the right companies that would outperform, deploy capital in a way that would outperform the S&P 500. So I think that's the better bet with the stock like this. And I don't want to make this video too long. So lastly, I was just going to talk about the last thing that I'm looking at. So I'm looking at buying a small business. And that's also another reason why I'm not deploying a ton of capital during this correction. I might need to pull out a certain amount of capital for buying this business. The reason that I'm looking at this is because I have my IT job and I do my investments and I have a good portfolio, but I kind of need something else to fill my time with. And I love investing and business. And so I thought it'd be a really good idea that I've kind of discovered to buy a small business around me and have that be a new venture that I work on in my life. And so I'm looking at a small business in the service and manufacturing space, something under $1 million in revenue, where the purchase price would be between $300,000 and $800,000. And I'll use an SBA loan. So the current state is that I'm working through all of the kind of foundational elements to actually be able to talk to sellers and pull the trigger. So I got a CPA on board so I can do the financial due diligence when I start talking to sellers and getting into the financials and details. I'm getting a lawyer on retainer so that I can do the LOIs, purchase agreement, and legal due diligence that goes along with it. I'm also working on getting pre-qualified for lending for the SBA loan. So more to come on this. Part of showing my portfolio is being transparent about everything, and this business would be part of my portfolio. So this will be part of the story on this channel. And I'm going to be transparent about everything that I do in my life that is part of my portfolio. If I take on more debt, if I buy a house, anything, I'll have it be part of my portfolio just so I can show what an average corporate professional that has a really big interest in investing in business, what someone like that is doing with their portfolio and their life. That's all for this video. If there's something you would like me to cover that I didn't, let me know in the comments below. Sometime next week, I'll have out an update video on my portfolio. I know it's been a couple months. Other than that, thanks for watching, and I'll see you guys in the next one.